I always speak about the fact that trading is reactive, trading is not predictive. However, there is one very specific scenario in which you can actually try to predict a fake breakout before it happens. Now, this doesn't mean that you have to trade before the fake breakout has actually been confirmed. However, you can expect a fake breakout. And which is the scenario and how can you actually identify it in the first place? Well, that is exactly what I will be speaking about in this video. So let me try to explain a simple concept. Okay, what is a fake breakout? Now, if you have a horizontal level of structure and the market is respecting this level of structure as resistance, let's say, and the market breaks above this structure resistance, which at that point is supposed to be turned support, because previous resistance, once it is broken to the upside, is supposed to be turned support. However, when the market goes to retest this support, instead of getting rejected to the upside, the market breaks again below the area. Now, obviously, this is a fake breakout because the market did not respect this zone as new support, but it broke back below it. So all this move to the upside was a fake breakout. Now, after the market breaks back below, what you expect is a retest of the structure before the continuation lower. And we capitalized on a lot of moves after the market had created a fake breakout, because fake breakouts are actually very, very, very good ways that market makers use to actually manipulate the market. And when it comes to fake breakouts specifically, there is one way in which you can understand when the market breaks above this area that actually it is a fake. And why it is a fake? Because hedge funds are simply using this move to the upside to bring all retail traders to buy so that they can actually sell. And that is something that happens quite often. And the same exact concept applies also in the case of a support area. If you have a support area that is acting as support, the market breaks below the area. At that point, if the market will break back above the area, this previous support will again be turned support here, and you have the possibility to create this inverted head and shoulders. And again, from here, we capitalize on a lot of moves to the upside after the market had created fake breakouts, because again, fake breakouts are used by hedge funds exactly to manipulate retail traders so that then after the market creates the move to the upside, they have already been able to buy what they wanted to buy here before the real move to the upside actually starts. And the reason for which these manipulations are created in the first place is that hedge funds, they have too much money to manage. So basically what happens is that they cannot just press the button and open a trades as we do, as there is not enough liquidity in the market for them to actually trade. So what they have to do, they have to generate the liquidity, which they do by bringing the market in creating these fake breakouts. Now, let's speak about how we can actually understand after the market has broken below structural areas that the market is actually ready from here to break back above. Okay, how can we understand when the market is already creating this break to the downside that we have high probabilities that the market will break back above? Now you might be arguing, okay, but this is not really useful because anyway, I don't want to be buying here because I don't want to predict the market, I want to react. And you're right, okay, anyway, you will not be looking for the buy from here. You will be looking for the buy after the fake breakout is created and after it is confirmed. But if you know that you can expect a fake breakout, you will be ready when the market will break back above the area, and on the retest, you will be looking for some nice longing opportunities. So how do you spot a fake breakout? But this is just to show this example because we have a situation in which we have quite good probabilities of actually seeing a fake breakout here on USD CHF. I want to explain to you guys the situation that currently we are having on USD CHF. And the concept is quite simple. If on higher time frames, so monthly and weekly, you expect the market to make a move to the upside, and if hedge funds are adding longs, however, on the daily time frame, the structure breaks to the opposite side, that structure break to the opposite side will most likely become a fake breakout, and the structure will break back to the original side, in confluence obviously with the monthly, weekly, and what is happening from a COT perspective. So I want to show you this in a live market example so that you will understand perfectly what I mean. Now, from a monthly perspective, at the moment on USD CHF, what do we expect? Now, after an impulse to the downside, what do we want to see? We want to see the market create a retracement. This is a general concept. You have an impulse, a correction, you expect a continuation to the downside, but before the continuation to the downside, you expect a retracement at least to the 0.382 of the Fibonacci taken on the monthly impulse. Therefore, if we take our Fibonacci here on this monthly impulse, so from this high to this low, we can see that the market still hasn't retraced to the 0.382. Therefore, this means that we can easily get a continuation higher for a deeper retracement to actually retrace to the 0.382 before the real move to the downside starts. So on the monthly, we would like to see the market create a move to the upside. We go down on the weekly, and what do we see? Now, from a weekly perspective, we can see that as we are speaking, we are testing quite strong weekly support. In fact, from a weekly perspective, we have previous weekly resistance here, again, previous weekly resistance here, which is all turn support inside of this area. So again, also on the weekly, we have previous resistance, now turn support that we expect the market to reject to the upside. And we also have, as usual, the confluence of the Fibonacci taken on the impulse. Because also here on the weekly, if you want information on this retracement, what you have to do, you have to take your Fibonacci on the impulse, therefore from this low to this high. And what we can see is that currently we have the 0.618, which is lining up perfectly with this previous resistance, now turn support. So monthly and weekly are both showing a bullish scenario. Going down on the daily, what do we see? Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next video. Now on the daily, we can see that the market is breaking structure to the downside. Specifically, we have a situation in which the market seems to be creating at the moment a break below this support here. Now, a break below this support would mean that this support at that point is turn resistance, and the market is supposed to retest this level before the continuation lower. However, we have quite good probabilities that the market will actually, after it will break below it, that it will break back above, or that even better, the market will just break above this level here, which is the previous support, now turn resistance at the moment. We have good probabilities that the market will break back above the area, which at that point will be turn support for the move to the upside. So as you can see, already from a technical perspective, we can expect a fake breakout in this case because monthly and weekly are bullish, however the daily is still bearish. So we have to wait for the daily time frame to shift to bullish, however we can be ready for that to happen. However, there is one problem to this scenario. In fact, from a COT perspective, so commitment of traders, what we see that hedge funds have been doing. Now, what we can see is that with the previous report, hedge funds on the CHF, they had opened 3K longs and closed 800 shorts. Now the CHF, as all currencies on the spot, is traded against the USD. Therefore, if you check the data for the CHF, you are actually checking CHF USD. So if you want information on USD CHF, you have to reverse everything. So if you read that with the previous report, hedge funds had closed 800 shorts, it means that they had actually opened 800 shorts. And if you read that they had opened 3,000 longs, it means that they had actually closed 3,000 longs. So with the previous report, when the market was here, what hedge funds were doing is adding shorts and closing longs. And in fact, we actually did expect this move to the downside, which is exactly what the market did. And if you want to see all the reasons for which we wanted to see this move to the downside, I will link in description the previous analysis in which, when the market was here, I explained all the reasons for which from here we wanted to see this move to the downside. But now, what we can see with the last report that we have. With the last report that we have, we can see that hedge funds have closed 600 shorts and opened 2.5K long positions. So inside of this area, even if the structure on the daily is bearish, hedge funds have been adding long positions. Therefore, a break to the upside is definitely possible. So we have the possibility to create a fake breakout at this zone. However, there is a problem. This is not the last report. The last report that we have is coming out today. Now, if with today's report, we will see that with this bearish structure hedge funds are adding massive longs on USD CHF and closing shorts, then we can definitely expect a fake breakout. If we see that with the new report, they have now shifted their direction and they're starting to short, obviously we cannot expect a fake breakout. So we have to wait for what we have from a COT perspective. This is how you actually understand if you can have a fake breakout. If hedge funds, even if the structure is bearish, are actually longing in this case or shorting if the fake breakout is to the opposite direction. So if we will see with the new report the same thing that happened with the last one. So we will see, for example, 1K or even better 2K longs getting closed, which means that they actually have been opened. And we see 6, 7, 800, even 1K is shorts getting open, which obviously means that actually they have been closed. We can definitely expect a fake breakout to the upside. So what do we have to do? Even if we will see this happening, can we just hit buy and buy at market? Obviously not. However, we will be ready, because even though, yes, the market can easily melt to the downside, if the market will actually create this fake breakout, so break back above the area, at that point, we have very good probabilities, because it means that this was a fake, that hedge funds used this fake to actually buy. So hedge funds are in the market, the smart money is in the market, and we can trade with them. So at that point, if and only if the market will break back above the structure on the retest, definitely there is the possibility to be looking for a nice long, which is exactly what we will be doing with students. And as usual, monthly, weekly, and daily combined with the COT data are the best time frames when it comes to the direction of the market. But the best time frame for entry is the 4 hours. So with students, when the market will retrace to this area, we will be monitoring price action, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside and completion of the correction that we want to see from a monthly perspective, rejection of the weekly support, and rejection of the fake breakout if obviously the market will actually create it, which at the moment we have absolutely no confirmation, because we have to wait for the break back above the structure. If it will not happen, the market will just continue to melt. However, we have to wait for this last report. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. In fact, every single day I give you a new daily market breakdown, showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all questions that you have every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out, and I will see you in.